This is the MTPredictor weekly market update for August 10th. So back from vacation here, had a great time. But a few weeks ago, remember I sent out in the weekly market update that the S&P was short. I explained that on Thursday. In fact, you can see the post here, that Thursday the ES hit its daily wave 5 target and then closed the day with a red seller's candle. And just to show you here, these are the MTPredictor add-ons for TradingView. If you go to tradingview.com, great new community forum and so forth of sharing ideas here on tradingview.com. You can post charts and review charts of others and just about every market out there. So I've got a profile set up. I'll go through some of the stuff that I've posted here. But anyway, here was the S&P. You can add these MTPredictor indicators onto the TradingView chart. By the way, it's I think $125 a month. And you get stock and Forex data's live data is free. If you want to add, I think, futures data, it's $10 a month. But anyway, so let's just take a look here, and let's look at, first of all, the 5-wave pattern that we were looking at. So we had just come in. You can see here is the minimum wave 5 target here, and we're just getting into that minimum wave 5 target when the decision point sell signal was given here. So we had a 5-wave pattern up with divergence. So we've had a higher high in price between these swings with the lower high in the oscillator here. And so the software gave the signal there, and there's where I pointed out that we did have a red seller's candle on that particular day. So we didn't get to, since I've been away, to cover the results of that trade, but you can see here the results of that trade, good for about 4 times the initial risk. Entry, stop, and target there. Now we've gone through that wave 4 decision point. The tendency is when it does that, now we've seen this before where the S&P will overshoot that wave 4 DP and then rally hard and begin a new trend. So it's done that before, but the tendency is normally when they break this wave 4 DP, that the potential is that they're going to wipe out the whole 5-wave pattern up here. So if I find wave 1 here and I go to the bottom of wave 1, I'm just going to take a decision point off of that level here. So that comes in around 1842 right here, right down around the 200 period moving average. This blue line is the 200 period, this is your 50 period, the red line here. So I would expect, and we did, after this move down, after we hit this target, I was expecting that we should rally some here. Now the market has come into what I call a value area in terms of we're in an uptrend, obviously, and we can see the uptrend just by using the moving averages here. It makes it a little clearer. So but when the markets drop below the 50 period but remain above the 200 period, it's kind of that value area. That's what professionals like to buy in that area when markets are in an uptrend. So below the 50-day, above the 200-day, below the 50-day, above the 200-day, below the 50-day, but above the 200-day. Those are all buying opportunities, and you can see all the buying opportunities as long as this market is in an uptrend. Okay, so this is pretty much what we have here. I would expect that we do get some buying in. If things roll over, we've got a lot of stuff going on overseas here, between Russia and Iraq and Israel, and so a lot going on, and that can obviously affect day-to-day things, and we could see more sell-off. But maybe we go down to the bottom of the wave 1 here, around that 200 period moving average, and then we'll see if that holds. We do have strength on the STF, which means there could be more downside ahead, even if the market does rally here. If this oscillator remains in the strength band at the bottom here, then that's telling us that after a rally things may roll over again. So we'll keep an eye on that. But anyway, this was a nice trade there. It's complete. and we'll see where we go from here and see whether or not eventually they're going to wipe out the whole 5-wave pattern up here, and that this is just the beginning of the correction, or if this in fact is a value area as it's been, over the last few years, drops below that 50 period, but as long as it's above the 200 period, a nice buying opportunity. So we'll see if that holds. All right, let me take you. I'm just going to take you to my profile because I've got some. Let's go. All right, so here's my profile here. You can follow me here. You can just do a search for MTPredictor USA, and that'll come up. But what I really wanted to get to was this is the Australian dollar Japanese yen pair. So I posted this chart 16 days ago. This was the setup because we had reached a major resistance in the Australian dollar Japanese yen, and again this was about the same time that the S&P was putting in the high, and these are correlated. The Australian dollar Japanese yen and the S&P are correlated, and so I actually shorted this, but I got in at the resistance right up here at the resistance on a smaller time frame. I'm already out of this trade, but you can see later this TS4 setup here with the entry, stop, and target. And if you click the bar to the button here to the right, it'll load all the subsequent bars after I set this up and posted it on TradingView here, and you'll see how the trade played out, which is really nice. So you can see that this eventually took a while to get going. It didn't drop as quickly as the S&P did. The S&P, by this time here, it had already hit its 4-hour target. This took a while, but it eventually did come down here, and you can see it hit that target down there at 94.16, and that was good for 4.5 times the initial risk. All right, so again, now we've reached a support level here in this market, and you see it's starting to move higher off of that, which is what we anticipate, that we should get a move higher off of this level here, and expect the S&P to kind of bounce, which we've seen the S&P the end of last week begin to do. All right, let's look at silver here. This is the silver futures here. This is again analysis that I posted. So here's that 5-wave pattern up that tested that $50 level in silver, and then after 5 waves, again we anticipate a correction back to the wave 4 DP, just like we got in the S&P. This is what silver did. This is the weekly chart here. And so this is where we sit in that kind of support level, and we've had subsequent highs. Each of these swing highs is lower than the previous swing high. All right, and so let me just forward this where we are currently. So this remains the case. This what will be this swing high here is still below the prior swing high, which is lower than the prior swing high before that, and so on. So if we're going to see a kind of bullish change in behavior, we're going to have to start making higher swing highs, and we haven't been able to do that yet. So this wave 4 here, again, the wave 5 target is still out there. That's around that $17.60 in silver. So we dropped below 20 there. It bounced a little bit off of 19 and change, but we'll see. Again, once they approach that prior swing high, things began to roll over again. So we're going to need to see, and you can see I wrote that here, is the trend line did break, but we still need to take out the last swing high and begin making higher lows. If we're to see a beginning of a new bull market in silver, and you can add gold and precious metals into that. But in the meantime, until that's the case, then we could see lower prices. We could see that 1750 to 60 level. If so, I will probably buy the rest of my silver, at least for a while, physical silver, down in that level if I can, if it does come down there. So we'll watch for that, and then if it doesn't come down there and instead we begin to take out these prior swings, then that's obviously going to be a bullish sign too. Related, the SLV, where's my, and the SLV on the daily chart had made a nice 5-wave pattern down. It corrected back to the wave 4 DP, took that out. So the tendency is, again, that they'll erase the whole 5-wave pattern down. Now we can see the sell-off here that is taking place subsequent. Alright, so we don't expect a straight line to that level, but the fact that they did breach that wave 4 DP, the tendency is that the whole 5-wave pattern down will get erased, and eventually that we'll see this 2118 is the level here that eventually looking for in the SLV, that target there. And finally here, just wrap up with the DAX, because we were tracking the DAX also putting that high in on the weekly chart here. And let's check the wave pattern, because you'll see how this looks very similar to the S&P, and you can see that 5-wave pattern up right in the minimum wave 5 target. The DP sell signal, so we had divergence up here as well. And if it'll allow me to place the analysis on here. You'll see the target here just a little further to go, didn't quite reach the decision point target there, 87.94.10, but so definitely stops to break even or trailing with a trailing stop at this point, because the S&P may be bottoming. So so we'll keep an eye on this, but you potentially have a little more downside in the DAX before that rallies, though. If the S&P rallies and the Dow rallies, the DAX is probably going to go with it. So we'll see how this one finishes out. But again, that important point was that these markets were ready to correct, and they all correlated together. You know, you had your Australian dollar, Japanese yen, the S&P, the DAX, all putting tops in with divergence, 5-wave pattern, at least in the DAX and the S&P. The Australian dollar, Japanese yen just coming into a very large or larger degree resistance point. So we've got some economic data this week, though it's going to be kind of light Monday and Tuesday. Things will start picking up on Wednesday, and so watch I think the jobless claims on Thursday, and then the overseas events obviously are going to be a day-to-day thing. So wish you a good trading week. We'll come back next week and see where things sit. So have a great rest of your trading week.